I'm going to invite you to do something that you cannot do when you are in a classroom. Go get a drink, go get a snack, and come here and take in where we now post to, or we prepare the income statement in terms of the adjusting entry, accrual, and prepayments. Okay, hi, good morning, guys. Going to start one time because I think this class is going to be kind of intense with some of the work that we have to do. Remember, like last week, we had the introduction, so just going to try and go into a little revision. Most of you seem to understand from the activities, so we will see from this if you kind of remember or really understand. So today's topic is going to be where we introduce the accruals and prepayments into the income statement. All right, so I just like to give credit where credit is due. What happened is Miss Lala had initially done most of the PowerPoints, and all the classes that I do is based off of the information that she would have put on those PowerPoints, and I just built on it. So if you would remember from last week, we had 4 types of accruals and prepayments. We had the accrued expense, accrued revenue, prepaid expense, and prepaid revenue. And the accruals was when the amount paid or received was less than the amount incurred or earned. Remember, we were supposed to compare 2 things. If they didn't tell you what was accrued or what was prepaid, what was owing or what was paid in advance, then you had to compare the 2 figures, which would have been the amount paid and incurred for expenses and the amount received and earned for revenue. The prepaid is when the amount paid or received is more than. So that is how you're supposed to know. And that is what we are going to just revise very quickly. So just remember the 4 types: accrued expense, accrued revenue. So you have to identify whether it was an accrual or a prepayment, whether it was an expense or revenue. So let's just get into it. Saints Roti Shop pays rent of $500 each month. At the end of the financial year, $6,500 was paid. So what is the adjusting entry? What I'm asking here, and this is for all of them, is which one of the 4 types is it? And what is the amount of the adjusting entry? So is it an accrued expense, accrued revenue, prepaid expense, prepaid revenue?
Is it C?
C? C,
Yes, I said
6,000. B, bat?
Yeah, B and bat.
This is Aidan, right?
Yes, miss.
All right, so Jameek had said C, and Aidan is saying B, bat. Any of the rest of you want to say any other, or which one between the 2 you think is correct? Nope. Okay, so we're going to go and see. And the answer is B, prepaid expense. So just to go through, remember the 2 things that you're going to be comparing would be the amount incurred, because this is, well, first of all, rent is what? It's an expense. So the options, let's just go back a bit. So you can see here one time rent, expense. So you will look at your options, and in this case, all of your options were expenses. So you don't get to eliminate anyone. So you have expense, 500 each month. This would be the amount incurred, but they gave you it in terms of months, and this is based on year. So that means you have to change this information from the 500 each month, because the information must be based on the same period. There must be some consistency. In this case, you're comparing annual figures or yearly figures. So if they give it to you in months, that means you're going to have to convert it into year. And therefore, this will be 500 multiplied by 12, which is 6,000. So you're comparing the 6,000 incurred with the 6,500 paid. The paid in this case was more. So if it's 6,500, it is more than the incurred, which is 6,000. So which means it's a prepayment. Whenever it's more, it's a prepayment. Whenever it's less, it's an accrual. So if it's, in this case, it is more, it's a prepayment. So you will have to eliminate the two accrued. So you would have B and D. And how much was it more by? 6,500 minus the 6,000 that you converted into the annual amount. So this will be the answer, B. Prepaid expense of 500. So that's the long process that you have to go through. So just remember that when we go on to the other four. I only put 5 for you guys. So the answer correctly, Aidan, was B, prepaid expense. Going to the next one. Holmes Guest House rents a room for $1,000. They received $900. What is the adjusting entry? So I'm going to give you guys some time. Remember the processes in terms of expense, revenue, accrued, prepaid.
Let's see.
C as in C cat.
Yes, miss.
Okay. Anybody else?
Miss, I say B as in bat.
B as in bat. So wait. So Jameek chose C again and Aiden choose B again.
Yes, miss.
Miss, I'm not 100% sure, but I say A.
Okay, and this is Romario or Rahim?
No, my sister's Jonathan Ali.
Hey, Jonathan. Okay, new voice, nice. All right, so you choose A as in apple.
Yeah.
All right, so we have a B, and a C. Nobody for D. All right, so we're going to go through it first to see which one of you three. Thank you very much for the participation. Rents a room for 1,000. This represents the amount. Actually, first of all, is it can you unmute and answer? Thanks for the guys who are doing that for me. Is it an expense or is it revenue? I think that might be the first thing that you should really identify, and then you might change your answer. So is this expense or is this revenue?
Expense.
Who says expense? That sounded like Aidan.
Aiden. Yes, miss.
All right, so then Aidan, then you didn't choose B then.
No, that was the wrong answer.
Oh, so this is the wrong answer?
Yeah, B.
Okay, so everybody says that this is an expense then. What about this? If they received money, would it still be an expense?
Yes. I think it's B.
So anybody wants to change their answer?
I check mine to B.
You're right.
Leave it mine as B.
So why, so this is what you guys have to so I realize what happens sometimes when you see rent or anything like rent, commissions, anything that is normally an expense, you just automatically assume that it is an expense. But for things like rent, you also have the income part of it. If the business is actually the one renting the room and therefore receiving the money, that would mean that it would be revenue and not the expense that you might have just initially assumed. So look at this one as well. Is the business receiving or paying? And that would identify whether it's revenue or expense. And that makes it easier because now you realized that it can't be A and it can't be C. So that leaves the two options, which makes it easier for you for the multiple choice now because you've just eliminated, process of elimination, left with two. So then you can move to the next step. You're comparing the 1,000 with the 900. This is the amount received. Is it more or is it less than the amount earned? It is less. Whenever it is less, that means it's accrual. So then out of these two, your answer would be B. So everybody understands now. So we have 3 more to see if you will get it, having learned something. Rent earned for the period is 3,000, while rent received is 3,900. What is the adjusting entry?
Miss, I say D as in dog.
Right, Aiden says D as in dog.
I see D also.
That's Jameek.
No, this is
Jonathan. Sorry?
Yeah.
Yeah. All right, so we have 2 D's. All right, we just go 3,000 and 3,900 is rent received, which means it's revenue. So it's one of these two again, B or D, rather than this. So you eliminate this one. Sorry? You say D as well. Right, so we have between B and D. This is happens to be more than, so they received more than the amount earned, which is a prepayment. So very good. Answer D. Another easy one, I think. Salaries paid is 12,000, while salaries incurred is 13,500. What is the adjusting entry?
I say A, accrued expense.
A, I'm hearing a lot of A's, so A, Apple. Salaries is always an expense, so that means it will either be A or C. We eliminate these two.
Miss, I say C.
You say C rather than A?
Yes, miss.
All right. All right, so we have 2 A's, I think, and a C. So we have the expenses. We know it's expense. We eliminated B and D already. We comparing the 12,000 paid with the incurred. If the paid is less, is that an accrual or a prepayment? Think of it this way. If you pay less than you're supposed to, because that is what incurred means. Incurred is how much you're supposed to pay. So if you pay less, that means you're still owing. And what's the next word for owing? Accrued. So the answer is supposed to be A. Am I correct? This is less, right?
Yeah.
Than incurred.
Yeah.
All right, good. So the answer really is supposed to be A. You always remember, if you pay less, it means that you're still owing money. You paid less than what you're supposed to, so you still owe the people and then their money. That's how you look at it. And this is the last one. I don't know if this looks familiar to you, but this was in your activity. So we have a construction contract of $100,000. The amount paid at the end of the period is $30,000, while the value of the construction completed at the end of the period is $45,000. What is the adjusting entry? So for this question, why it might have confused people more is because we now have three figures rather than they just gave you the two figures, and you had to know which of those three figures, which two you were supposed to compare, and that is where some people kind of got caught. So the easiest thing to identify would be how much was actually paid, and it was the 30,000. So 30,000 was paid. What this paid also tells you is that it would be an expense and not revenue. So you can eliminate from these one time. Expense stays, expense stays, expense stays, but revenue doesn't. So you eliminate D already. Which one, this is where you guys can answer me. I know some of you might already have the answer, but I am asking which of these figures is the amount that is incurred, because we're dealing with an expense. Is it the 100,000 was incurred or used up, or was it the 45,000 that was incurred or used up? Nobody? Is the 45,000. This here is the contract, meaning that that is how much they are charging for the complete project. But for you to know how much was actually incurred, you have to look at how much was completed, because that is how much you actually would incur. You can't incur something if it's not completed. There's still completion to be done. So the figure that you really would have had to look at would have been the 45,000. This information here, the 100,000, that was irrelevant at that point. Okay, that just gave you the total amount that after completion of the entire project, that is how much would be incurred. But as at the end of the period, the only amount that had been completed and therefore incurred would have been the 45,000. So that means you would be comparing 45,000 with 30,000, not the 30,000 with the 100. So which means that we eliminate anything with the 70,000, which some of you got. So that will only be A. So A gets eliminated one time. So now you have two options. You just have to compare the two. Is it a prepayment or is it an accrual? Can I quickly get which one, B bat or C cat?
C, miss.
C, miss.
C, right, because the amount paid was less than the amount incurred, which is you were supposed to pay this, you only paid 30,000, which means you're still owing 15,000. Nice. So with that, we are now going to go into the new lesson, which is the adjusting entry, the accruals and prepayments in the income statement. So you remember from our accounting cycle, journals into ledgers into trial balance, and we are now doing the adjusting entries, the accruals and prepayments. After you do your accruals and prepayments, you still have your fifth step, which is to prepare your income statement and your balance sheet. So we learned the 4 types of accruals and prepayments. Now we are going to put it into the income statement. So that is what this class is going to be about, the introduction into it, and finally doing the income statement with it. So reminder, we are going based on the accrual principle, which states that when calculating net profit in the income statement, it is the expense incurred and the revenue earned that goes into the income statement. So this is in your workbook, so you can always take a look at it, page 224, but it just tells you what we just said there. Revenue recorded in the income statement is revenue earned, whether or not the cash has been received or not. So you always have to look for or work towards the amount earned. And the expense recorded is the amount incurred, not the amount paid, but the amount incurred. So for the income statement, this is what you're always working towards. the revenue earned, and the expense incurred. So this is your income statement. We only have one expense really up here, which would be your carriage inwards. So this would fall into the same category as the other expenses when we do it, but we focus mainly on the bottom part, which is where all your expenses other than the carriage inwards goes, and your revenue. So these are your revenue and these are your expenses for your income statement. If you remember, we're going back to doing these things again, where you calculate your gross profit and then you add revenue. So what they're saying is the revenue here, like discounts received, interest received, rent received, commissions received, service fees received, all your revenue that goes here would be the revenue that is earned, or the income that is earned, whether it has been received or not, or whether you received more or not. So this is what we're going to be working out, what is earned. And for your expenses, it will be the amount incurred, whether or not you paid it or you paid more. So it will be the salaries incurred, the rent incurred, the advertising incurred, the discounts allowed incurred, the utilities incurred. That is the figures that we put into the income statement, emphasizing that, right? So you're looking towards working out earned and incurred, because it's a cruel world. Yay. So we're going to go with the expenses first. Even though revenue comes first in the income statement, we always like to deal with the expenses because it's the more popular one. There are times, many times, as you guys would have seen, where you don't get any revenue at all, or you get little revenue, but you always have expenses. Always. Because the main revenue for a business is your sales. You don't have to have other revenue really, but a business must have expenses in order to operate. So you always have expenses, and that is why we focus on the expenses first. And we will see again, going to emphasize it over and over. Expenses incurred for the period is entered in the income statement. So when you have your income statement and you have less expenses, it is the expenses incurred. Income statement, expenses incurred. The expenses incurred goes into the income statement. Y'all get that? I hope y'all got that, because we're saying it over and over and over and over and over again. It is the expense incurred that goes into the income statement. So if the expense paid is less than the incurred, which we already did, that means you have an accrued expense. If the expense paid is more than the incurred, that means you have a prepaid expense. But what is important here, we come back to it again, most importantly, you must enter the expense incurred in the income statement. So whether or not you have an accrued expense or you have a prepaid expense, which is the expense that must go into the income statement? The amount that is incurred. So ways that you can identify the expenses incurred for the year. They might tell you. Okay, so they might tell you how much was incurred for the year. And what are some of the ways that you might see it? If they do give you that information straightforward, they might tell you how much was due for the period. So they will tell you that for the electricity bill, $800 was due. That means that that is the amount that was incurred. Or they might give you the monthly expense, like you saw in our examples before where they said rent was $500 a month. If they tell you that, for you to find out how much was incurred for the year, you just multiply by 12, right? So it's as easy as that. So if they tell you that the monthly expense is $500, you will just find for the year, which would be 500 multiplied by 12 months, and that will give you $6,000 incurred for the year, and that is the amount that will go into the income statement. We saw this one as well. If they tell you the service completed means that that amount has been incurred. So if you see that language, this has been completed, that means that is they're telling you that is the amount that is incurred and goes into your income statement. If they tell you the bill amount, so they say the electricity bill is $800, what they are telling you again, that is the amount incurred. This one is an interesting one. When you take a loan, you pay interest on the loan, and the interest on the loan is an expense. How much is incurred in terms of interest on loan? It's usually a percentage. So they will tell you that when you take a loan, it's a 5% loan. So how do you calculate the interest on that loan? It will be 5% of whatever the principal amount of is for the loan. You will see it further on and it will become clearer for you. In fact, I think I have an example for you in terms of two things. So, for example, the insurance monthly premium is $200. All right, so what would be the insurance incurred for the year? Simply, they gave you the monthly premium, which is $200. So for the year, you just multiply by 12 months, and therefore your incurred amount will be the $2,400. All right, so this is what I was talking to you guys about. We have a 10% bank loan of $20,000. So the $20,000 is the loan or the liability. What would be the interest incurred by the end of the year, the amount of the interest on loan that will go into the income statement? I would like one of you to try, please. My brave boys. $2,000 is very correct. Excellent. So what would be the interest on loan incurred? It would just be the 10% by the total amount of the loan, and that will be $2,000. So this would be the amount incurred, and this will be the amount to go into your income statement. So what we've been doing here is when they do tell you what is the amount incurred, and you can identify they have told you what is the amount that goes into the income statement. So you don't have to do any working in terms of accruals and prepayments. You may have to do some working in terms of like percentage or the monthly by the 12 months, but they basically may have just told you what is the amount that goes into the income statement. However, what if they did not tell you what is the expense incurred? That means you now have to find out what is the amount that goes into the income statement, which is basically what they do most of the time. They don't tell you straight out what is the amount that goes into the income statement. You have to find out what it is. So this is what is required whenever you have an accrual or prepayment to calculate what goes into the income statement or to find out what is the expense incurred. You add accruals to the amount paid, or you less prepayments from the amount paid. This is basically going to be our lesson. So once again, when adjusting entries, meaning accruals and prepayments, are required to the expenses paid, to find the expense incurred, you add the accrual or you less the prepayment to find out what the expense incurred is. So we're going specifically now. Expense incurred, add accruals. Y'all seeing my AA? We are using the battery. Remember this ridiculous looking battery man? AA, what does the double A stand for? add accruals. See how easy? Add accruals. AA, AA batteries, you always add accruals. So whatever the accrued amount, if they give you an accrual and they give you the amount that is paid, to find the amount that goes into the income statement, which is your expense incurred, you would take the expense paid and you would add accruals. We're going to see if you understand that. Home's guest house pays electricity each month. At the end of the financial year, Homes paid $6,500 on the utility but still owed $500. What was the electricity incurred for the period? The period in this case is a month, guys. So once again, they paid $6,500 and they had an accrual of $500. So what are we supposed to do? You always add accrual. So 7,000, which was the answer given just now. So as easy as that, add accruals. So let's just see how easy this one will be. Paid 2,000, accrued amount of 400. What is the expense incurred, or what is the amount going into the income statement?
2,400.
D, 2,400. Once you identify it as an accrual, what do? You add it. So business paid rent of 200 monthly, still owed 600, which means it was an accrual. This one needs a little additional working. So what is the amount that goes into the income statement for the year?
3,000.
3,000. Thank you, whoever. I hope there's nobody that isn't getting it. This one, you just had to find out the annual amount or the yearly amount. 200 multiplied by 12, which is 2,400. Add accrual of 600, 2,400, add 600 gives you 3,000, and that is the amount that goes into the income statement. Easy. For prepayment, what did we say that we do? It will be less prepayments. So it's the opposite of the accrual, the battery man, the add accruals. You will just have to less the prepayment. So less prepayments, if you are given the amount paid and you're given a prepayment, just do the opposite and you're lessing. So if the insurance premium is $1,200, but you have a prepayment of $300, what is the amount that is incurred? You're lessing prepayments.
900.
900. Thank you. Rent paid 1,400, 400 in advance. So paid for the following year. That is a way of you knowing that it was paid in advance. If it's not for this year, that means it's for the following year. That is in advance. So that's a prepayment. So you have to less it. So that'll be 1,400 minus 400, which should be B. Oh, all right. So the rent paid of 3,600 was for 2 years. So half of this is a prepayment, which is the amount that will go into the income statement. I want somebody to answer this one for me.
1,800.
Yeah, there you go. Excellent. And I will see from the video who that very confident person was. So 1,800. They may not be this direct with you, but if they tell you that it is for 2 years and the expense incurred is for 1 year, then you just have to find out for the 1 year. And if it's 3,600 for 2 years, that means for 1 year it will be half of that. Okay? So because of time, I can't send you guys a way to do this, but it's on the stream for you to do after this lesson. But this is where they tell you your trial balance would usually tell you the expense that is paid. So everything in this column here is how much was actually paid, and this will be the accrual or prepayment. So for example, when you see owing, that means it's an accrual. And what do you do with accruals? You add the accrual to the amount paid. So that is what you're just going to put here. You're just going to put your working. So like this one was rent paid was 2,400, accrual was 800. So therefore, since you add accruals, it will be the 2,400 plus the 800, and this column will be your answer in terms of what is the expense that is incurred or goes into the income statement, right? Which in this case would have been 3,200. This one, paid in advance, means it's a prepayment. What do you do with prepayments? You less it. So the amount paid, 500, you less the 100, and the amount that will go into your income statement, 400. This one is an accrual, so you would add. Outstanding means accrual, so you would add. Paid in advance means prepayment, so you would less. Accrual, add. This one is like the one for the 2 years. If it's 2 years, 24,000 was for 2 years. Find out how much it would be for the year. How much is supposed to be allocated to the year, which is half. Yeah, this is a nice one. I want to see how, if you guys can get it. You're going to be using some math skills in terms of this, but basically, if 36,000 was paid for 15 months, what do you have to find out for what goes in the income statement? Annual amount. Okay, so everybody gets that? You're just finding out the annual amount.
If you go down in the expense and trial balance, you see one that doesn't have anything in it.
This one, right? The accrued interest on loan. All right. If the accrued interest is 300 and you have nothing here, what does this actually mean that nothing was paid? So this will be 0. So it will be 300. It will just be 300 plus the 0, and that will be the amount incurred. Can somebody work out this one for me? The interest, what will be the amount incurred? Do you have to do any working with this one actually? I don't think you have to. This would just be the 10% of the 20,000. So this is an example where they gave you this information, but you don't need to use it at all to work out how much was actually incurred, because they gave you the incurred amount here. You just have to work out the percentage of the 20,000. But I'll find a giveaway that one. So y'all will work out this one too, and this one, and the others, and see if you get it. But you're not doing that now. We're going to continue with the lesson. All right, so we're going on to the revenue. And it is the revenue earned. So like the expense was the expense incurred. This is the revenue earned. Emphasis again. Hope you got it. And it's the same like the expenses. Revenue received may be less than the revenue earned, and then you have an accrual, or it may be more than the revenue earned and you will have a prepayment. But the most important thing is that what goes into the income statement is the revenue earned. Whenever adjusting entries are required to revenues received to find the revenue earned, it's the same as the expenses. AA batteries, you add the accrual or you less the prepayment. So it's the same thing. There's no difference, there's no opposite. You always add the accruals. You just add the accrued revenue to the revenue received, which you will also find in the trial balance. And if it's a prepayment, to find the revenue earned, you just less the prepayment. So revenue due for the year or the period, you would have revenue due for the year, they tell you that is the amount that goes in the income statement. If they tell you a monthly revenue, it will be multiplied by 12 to get the annual amount or the yearly amount. Or they might tell you how much was completed or earned. That is the amount that will go in the income statement. But the main point that we make is if the period is for a year, whatever information they give you, you are working it out for a year, right? Which is 12 months. So just always keep that in mind. So that is in addition to you add accruals and you minus prepayments, and this will be your next activity but with revenue, but it's the same as the 6.5. You're just going to identify whether it's a prepayment or whether it's an accrual, and then you're just going to add the accruals less the prepayments, or work it out in a different way. Like for this one, they tell you how many months it was received for. You have to work out how much is allocated to a year, which is 12 months, right? So you're going to use a little thinking there, but I'm sure you guys will get it. It's nice to be challenged, so try to figure it out. So the interest, we give you some dates here, which means that you're going to have to count the amount of months and all that sort of thing. So just have fun. All right, remember you add accruals less prepayments, and this is for both expenses and revenue. It's always this, right? Batteryman and, well, I got to hold the sign for. So going into the income statement, this is the part that you will always have to work out the amount earned and the amount incurred. So you may have to add accruals less prepayments for the income and for the expenses. So we are going to do an example. Everybody sees the trial balance. Remember your trial balance with your debits and your credits. Your expenses will be debits, of course, and your revenues will be credits. So the trial balance or the cash book, but in this case we are using a trial balance, shows the amounts that are paid and received. So repairs, in terms of repairs, is $500 that was paid. In terms of utilities, it was $300 that was paid. In terms of rent received, which is credit, that means it's revenue, it was $1,000 that was received. Interest revenue, it was $100 that was received. Then down below in the additional information, which is how your questions will be, they will give you the adjustments, or they will give you the information like the incurred or the accrual and prepayment. All right, so additional information, we make it real easy for you, is either accrual or prepayment. So we have no incurred in there already for you that you have to work out 12 months or whatever. It's either an accrual or a prepayment. So that is where you would find that information in the notes down below, or the additional information that will tell you what has been accrued or what has been prepaid, if any. So once again, trial balance tells you the amount paid and received, and the additional information or the notes tell you if there are any adjusting entries that have to be taken into account, any accruals or prepayments. So we're going to do very quickly, and we're going to take the first additional information, which would be repairs paid in advance. So the first thing you will do is identify whether this is an accrual or prepayment. Very easy. Paid in advance is another way of saying it's a prepayment. So if you have a prepayment, what you do with prepayments, you always less the prepayment. So your repairs paid, $500, less your $50 prepayment, means you have $450. The $450 represents the expense incurred, which is entered in the income statement. So here you have your income statement. You have expenses, and as you can see here, repairs, and you have the working, and the answer goes into the column 450. I want to emphasize this, please. You don't have to put the word prepaid. We put that there for you so that you know, since we are introducing it to you. But when you are doing your income statement for me, your working is going to go at the side here. So let me just go back and show you what I want when you're dealing with this. So you have your expenses. Repairs is an expense. You go down here and you see that we have a prepayment. So what you will do is you will go into your income statement. You have expenses. You put repairs. Since there is a prepayment, that means that you have to do working or an adjustment. So you are going to open brackets, put the amount that was paid, which you get from your trial balance, minus your prepayment, $50, close brackets, and then put the answer in the column here. Clear? So you don't have to put the word prepaid, but you must have your working next to your expense if you need to. Right? I hope you all are getting what I'm saying. I'm going to be emphasizing that over and over. Working is extremely important, because if you get the wrong answer, you just get 0. But if you have working and we can see why you may have gotten it wrong, you may get some marks. So please, I'm begging you, because some people listen to me and some people don't. I know this from experience. So you're always going to put it like this. For prepayments, you would just put minus. For the accruals, you will put the add, which we will see for the next one. So we did the first one already. We're going to do number 2. Y'all realize how easy this is, right? Utilities accrued. What is accrued? It's an accrual. What do you do with accruals? You add them. You add accruals. You're AA battery man, right? So add accruals. So what you're adding the accruals to? The amount paid, which is in your trial balance, $300. This amount paid, you're adding your accrual. How much is your accrual? $75. So when you add that, you get $375, and that is the amount that is incurred and goes into your income statement, like this. So you see the highlighted area. You have utilities under expenses. You would put your working, open brackets, 300, which is the amount you got from your trial balance, plus the accrual. So add the accrual, 75, and your answer goes in the column $375. Got it? Yeah? So we go to the third one. Easy. In advance, which means it's a prepayment. What do you do with prepayments? You less it. So you will just simply go rent received. How much was received? $1,000 less the $200, which will give you $800, and that is the amount that goes into your income statement. Since this is revenue, you have it here. Rent received, you're working, open brackets, 1,000 minus the prepayment 200, answer in the column 800. And the last one, interest revenue owing, accrual. What do you do with accruals? Add the accruals. How much was received? Trial balance 100. Add your accrual of $25. That gives you $125. That is the amount that is earned, goes into your income statement like this. Under revenue, interest revenue, 100 plus 25, and you put your answer in the column there. And that is where your income statement will look like this after you have done all of your adjustments and stuff. You had 2 revenue and you had 2 expenses. All of them had an adjustment to be done. In this case, they had a prepayment, so you lessed it. This case, you had an accrual, so you added it. This one, a prepayment, less, accrual, add. And the answers go in the columns there, but you show your working on the side there. If an expense or revenue had no adjustments, you would just simply put the revenue here and just put the answer from your trial balance here. Or you would just put the expense and you would just put the answer there. But once there's an adjustment, meaning once there's an accrual or a prepayment, you put the working in brackets, less prepayments, add accruals, and you put the answer in the column. And that's it. That's the end of it. That is what you do for an income statement. That is basically the end of the class, and it's to just send you guys off to do the 2 activities that I gave you to do, and then later on in the week, after I have posted this lesson for you so that you can review it if you need to review it, I will give you an income statement to do. Alright, so what you got out of it? Add accruals, double E, right? So you're always going to be adding your accruals. Simple as that. And you will always less your prepayments, whether it's expense or revenue. So once you identify it as an accrual, add it to the amount paid or received. Once you identify it as a prepayment, less it. It doesn't matter whether it's revenue or expense. Easy as that. But we're definitely having another class next week. Okay, we're going to go into the balance sheet and then y'all will let me know if you want to have any more. Cool?